Hello, you're watching Dukascopy TV, and it's time to just spend 5 or 6 minutes running through the latest US retail sales data after Friday's non-farm payrolls pointed to an economy not quite ready to run just yet. Well, joining me on the line from New York is Mike Baghdady of Training Traders. Mike, thanks for joining me. So the figures are in, and despite a rise of just 0.2%, this is better than was expected.
Oh, absolutely. Yes, it was. It was a much better number. The prior month numbers were slightly downgraded. The data was downgraded probably because of the weather and the Christmas shopping numbers that have been calculated at the end of the month. But it didn't really have any much of a real negative effect. I mean, the market is still holding steady, and the dollar is beginning to pick up some momentum in. When you take away the ex-auto and you go into the core numbers of sales, this is a very key number because it represents the available disposable income that the consumer has to spend, and that is the amount of money that he injects into the economy to support the economy. And that, per se, is a pretty good number and a pretty decent number that came up this month and the prior month.
Now, one of the main reasons we've seen a comparatively low figure compared to November's rise of 0.4% is down to the auto purchases. And if you couple that with the freak weather the US has been experiencing, it's no wonder analysts' estimates fell well short of the mark.
Absolutely. And all the auto sales that happened before Christmas, and it was quite surprising that most of the shoppers during the Christmas, instead of going to the retail stores and actually do some shopping, they did go to the car dealerships, and I think they had one of the best months of car sales, which was December before Christmas. So having such a fantastic month in December in auto sales does not mean it will repeat itself in the following month. And this what threw the analysts off.
Is it really safe to blame most of the slow or lower than expected data on the recent bad weather, or is there something hidden away that analysts aren't quite seeing?
I think there is other issues that to be taken into consideration. Probably the budget talks, the debt ceiling talks, and all that stuff. Even though they have reached a $1 trillion yesterday agreement for finance for the budget, but with that said, I mean, this has happened yesterday, and you have the 2 weeks, which pretty much from Christmas onward. Pretty much all the consumers are home, Christmasing, having Christmas, so they're not really shopping that much. So the numbers seem to fall within the seasonal scale. I mean, there is a seasonal tendency, and it has fallen in the seasonal tendency. If you look at all the economic numbers for the U.S. economy over the last year, including the retail sales, you will find that, aside from just last month, most of the numbers have been revised upwards.
But we've seen bonds move lower prior to the release, and even US 10-year note yields hit a 1-month low, and that was just before the data came out. Is that normal, and are we staring at a nervous US economy that's still trying to learn to walk before it can run again?
You're absolutely correct. We're staring at a nervous economy. We had the shock and awe number that came out yesterday in the unemployment. So we don't have the steady stream. So there is a lot of uncertainty with regards to the U.S. economy, and people are speculating what the Fed would do, and that's why you probably get the knee-jerk reaction in the bonds. But we do have a Fed that has been very clear in its policy over the last year, which is transparency and having a long-term forward policy. So I don't foresee any changes in the Fed policy.
Okay, thanks for joining me today. Some positive data for the markets, it seems. Tomorrow we'll be heading to the Middle East to look at the latest on Iraq and the investment climate there. I'll see you then. Bye-bye.